Welcome back to the Z Consulting Podcast. Today we are diving deep into something I think that's on every entrepreneur's mind, funding.
Yeah, absolutely.
We've got this incredible resource called 40 Proven Ways to Fund Your Small Business by Live Plan.
Right.
And let me tell you, it is truly like opening a treasure chest of possibilities.
It is, really is. It throws open the doors when it comes to funding.
It does. It really does.
Yeah.
And that's what I'm so excited to unpack with you today.
Yeah.
So before we even jump into the specific avenues, the article really stresses the importance of having a solid financial plan first. Does that surprise you?
Not at all. Really, it's foundational.
Okay.
I mean, think of it as the blueprint for your funding journey because a clear financial plan, what it does is it shows potential lenders or investors you've thought things through,
Right.
you know what you're doing, and that in turn increases your chances of actually securing that funding.
So it's like showing up prepared to a meeting. You've got your numbers and your projections and your strategy, and it just kind of inspires confidence.
Precisely. It shows that you're serious about using their money wisely and maximizing its impact.
Okay, so solid financial plan check. Now let's get to the funding options themselves. The article starts with traditional loans, so you've got your SBA loans, bank loans, the usual suspects.
Right.
But then it mentions this thing called the Small Business Lending Fund. What's your take on that?
Well, the Small Business Lending Fund is interesting because it actually incentivizes banks to lend to small businesses.
Oh, yeah.
So essentially what happens is the government provides capital to these lenders, and the more loans they give out, the less they pay for that funding.
Wow.
So it's really a way to kind of encourage these banks to be more active in supporting smaller ventures.
So it's like a nudge from the government saying, hey, let's get this capital flowing
Exactly.
to the businesses that need it. Okay, I like that. Now let's talk about grants because the article lists a whole bunch. The National Association for the Self-Employed Grants, NAV's Small Business Grant, Small Business Innovation Research Program, Amber Grant for Women, National Institute of Health Funding, and Government Small Business Grants.
Yeah.
What stands out to you in this category?
Well, the obvious appeal of grants is that they're free money.
Right.
You don't have to repay them.
Yeah.
But of course, that also makes them highly competitive.
Right, you have to stand out.
Yeah, you've got to stand out from the crowd and make a compelling case for why your business deserves that funding.
Absolutely.
And then a lot of these grants have specific eligibility criteria.
Oh, yeah.
So for example, the Amber Grant is specifically for women entrepreneurs, while the National Institute of Health Funding targets health-related businesses.
So it's all about finding the grants that align with your business and crafting a strong application that highlights what makes you unique. Got it.
Yeah.
Now let's shift gears a little bit and talk about fintech because it's really amazing how technology is kind of disrupting the traditional financial industry.
Absolutely.
The article mentions platforms like American Express Business, Blueprint, OnDeck, PayPal, and Lendio. What are your thoughts on this whole fintech wave?
Well, fintech is really all about making funding more accessible and efficient.
Yeah.
What's really interesting is how these platforms often use alternative data to assess a business's health. They go beyond the traditional credit scores.
Oh, so even if your credit history isn't perfect, you might still have a shot at securing funding through fintech.
Absolutely. That's right. So for example, OnDeck uses your annual revenue as a key indicator, while platforms like PayPal offer quick access to funding for existing users. And then if you're feeling overwhelmed by all the options, you can use Lendio, which acts as an aggregator and connects you with multiple lenders.
It's like a matchmaker for business funding.
Yeah, that's pretty cool.
Okay, let's talk about crowdfunding because it's become so popular.
Sure.
And there are so many platforms to choose from. You've got Kickstarter, Indiegogo causes Patreon fundable. What are some key differences our listeners should be aware of?
Well, I think the biggest difference lies in their models and target audiences. So for example, Kickstarter, they use an all-or-nothing approach where you only get the funding if you reach your goal.
Okay.
So it's high risk, high reward, and it's often best suited for product launches or creative projects that have a broad appeal.
So then Indiegogo offers more flexibility
Right.
with their funding models.
Exactly. And then you have platforms like Causes that are specifically geared towards social impact projects.
Right, and then Patreon, which is more for creators.
Yeah, exactly. Caters to creators with subscription-based models, so podcasters or artists.
Okay, so it's all about finding that platform that aligns best with your project and target audience.
Precisely.
Now, speaking of aligning with your audience, how do you see the strategic role of crowdfunding beyond just raising capital.
I think crowdfunding is a fantastic way to validate your business idea, gauge market demand, and build a community around your product or service.
Yeah, it's almost like a built-in focus group
Absolutely.
and a marketing engine all rolled into one.
Exactly.
Okay, so we've covered traditional loans, grants, fintech, and crowdfunding. Now let's dive into the world of peer-to-peer lending.
Sure.
What are the key benefits for businesses considering this option?
Well, peer-to-peer lending, what it does is it cuts out the traditional financial institutions and it connects borrowers directly with individual lenders.
Okay.
And this can often result in more favorable terms and a faster approval process.
Makes sense. The article mentions platforms like Prosper Lending Club Upstart and iBusiness Funding. What are some of the nuances between those platforms? Because they all seem to offer peer-to-peer lending, but I'm guessing there's some key differences.
Right. Well, Prosper, which is one of the pioneers, they use an evaluation system to determine your interest rate, while Lending Club requires at least 2 years in business to qualify. And Upstart focuses on young entrepreneurs and utilizes alternative data like education and job history to assess their potential.
So it seems like each platform caters to a slightly different niche.
Exactly.
That's helpful for our listener to know when making their decision.
Absolutely. And then it's worth noting that iBusiness Funding connects you directly with investors for loans ranging from $25,000 to $500,000.
Okay.
So that offers another avenue for businesses that are seeking larger sums.
Got it. So we've got a good overview of peer-to-peer lending. Now let's step into the high-stakes world of venture capital.
Yeah,
This is where dreams of massive growth and big exits come into play, right?
absolutely. Venture capital is definitely for businesses with ambitious goals and the potential to scale rapidly.
Okay.
I mean, these firms are looking for game changers, the next big thing.
They want to get in on the ground floor
Exactly.
of the next, Uber or Facebook
Right.
or something like that. The article mentions online platforms like Funders Club and Microventures as
Right.
potential avenues. Now, Funders Club sounds pretty exclusive because the article mentions they recommend getting a founder referral before even applying.
Yeah, they're highly selective. They're focusing on businesses that have a strong team, a unique value proposition, and a clear path to significant returns.
Okay.
Microventures, on the other hand, has a history of supporting early-stage startups, and they've recently opened up to non-accredited investors.
So that's potentially a more accessible entry point
Exactly.
into the world of venture capital.
Right.
Exciting. Okay, so we've covered venture capital. Now let's talk about angel investors.
Yeah.
So these are individuals, often successful entrepreneurs themselves, who invest their own money in promising startups.
Yeah.
What are some of the key advantages of working with angel investors?
Well, angel investors, they bring more than just capital to the table.
Up down.
Often they have deep industry experience, valuable networks, and a willingness to mentor and guide the businesses that they invest in.
It's like having a personal board of advisors
Exactly.
who are also financially invested in your success. That's awesome. The article mentions platforms like Gust and CircleUp as potential ways to connect with angel investors.
Right.
And it highlights the Angel Capital Association as a great resource for learning about angel investing and connecting with experienced investors.
Yeah.
So even if you're not actively seeking funding right now, it's a valuable network to tap into.
Absolutely. Building relationships and learning from those who have walked the path before you is invaluable in the entrepreneurial journey.
Okay, we're making great progress here.
Yeah.
Let's move on to microloans.
Yeah.
So these are smaller loans, often under $50,000, which can be a lifeline for businesses that need a little boost.
Yeah, microloans are a great option for businesses that might not qualify for traditional loans or need a smaller amount of capital to cover specific expenses.
Okay, the article mentions Action Left Fund, Kiva, and Opportunity Fund as potential providers. What are some key things our listeners should consider when exploring microloans?
Well, it's important to compare interest rates, loan terms, and any additional fees that are associated with each provider.
Okay.
Some, like Kiva, they offer 0% interest loans, which can be incredibly attractive. And others, like Opportunity Fund, they focus on supporting underserved entrepreneurs, which aligns with their social impact mission.
So it's about finding the provider that aligns best with your values and financial needs.
Exactly.
Makes sense. And don't underestimate the power of a small loan to make a big impact on your business.
Absolutely.
Okay, we've covered a lot of ground here, but there's one more category in the article that I'm particularly excited to discuss: pitch competitions.
Ah, yes. The thrill of the pitch.
Exactly. Pitch competitions can be a fantastic way to gain exposure, refine your pitch, and potentially secure funding, all while networking with other entrepreneurs and investors.
Absolutely.
The article highlights a few examples: Hatch, Pitch, TechCrunch, Disrupt, and Web Summit. What advice would you give to someone considering taking the stage at a pitch competition?
Preparation is key.
Okay.
Craft a compelling story, highlight your unique value proposition, and practice, practice, practice.
Yeah.
And don't be afraid to get feedback from mentors or other entrepreneurs before the big day.
And even if you don't win, the experience itself can be invaluable.
Absolutely.
You'll gain confidence, make connections, and get valuable feedback on your pitch.
For sure.
Okay, before we wrap up this part of our deep dive, let's touch on the foundation of many funding journeys, bootstrapping.
Sure.
Bootstrapping is all about resourcefulness, making the most of what you have.
Right.
It often involves getting creative, minimizing expenses, and finding ways to generate revenue without relying on external funding.
Exactly.
The article mentions some kind of classic methods like tapping into personal savings, selling assets, even getting a side hustle to fuel business growth. Have you seen any particularly creative examples of bootstrapping in action?
Well, one example that stands out is the story of this massage therapist who pre-sold massages to fund her education.
Oh, wow.
It's a brilliant way to validate demand and generate revenue up front, all while building excitement for her future services.
That's thinking outside the box.
Absolutely.
I love that. Okay, so we've covered a ton of ground in this first part of our funding deep dive. From traditional loans to venture capital crowdfunding to bootstrapping, it's clear that there's no one-size-fits-all approach.
The key is to understand your business, your needs, your goals, and then choose the path that aligns best with your vision.
And if you're feeling overwhelmed by all the options, remember that companies like Nidus Lab can provide expert guidance.
Absolutely.
Their team specializes in AI web apps, software chatbots, design, and content. They can help you develop a comprehensive business plan, create a compelling pitch deck, even connect you with potential investors.
So whether you're just starting out or looking to scale your business, check out Nidus Lab at www.niduslab.com.
Great advice. We'll be back shortly with part 2 of this deep dive, where we'll continue exploring this exciting world of business funding and uncover even more valuable insights. Stay tuned.
Welcome back to the Z Consulting Podcast. We're continuing our deep dive into the world of business funding, exploring even more ways to fuel your entrepreneurial dreams.
And before we jump into the next category, there's something I think really crucial that we need to address that applies to every single funding option we've discussed so far.
I think I know what you're getting at. We can't just jump headfirst into any opportunity that comes our way, right?
Exactly. Due diligence.
Yes.
It is absolutely essential no matter which funding path you choose, whether it's a traditional loan, a grant venture capital, even crowdfunding. Doing your homework can really save you a lot of headaches down the road.
So what does due diligence actually look like in the context of business funding?
It's about thoroughly researching any lender, investor, or platform you're considering.
Okay.
Really dig into their track record, reputation, terms and conditions, any fees involved.
So it's like checking references before hiring someone.
Exactly.
You want to make sure you're partnering with trustworthy and reputable entities.
Absolutely. Read reviews from other businesses, talk to entrepreneurs who have experience with different funding options, and don't be afraid to ask questions.
Right. If something seems too good to be true, or there are any red flags, dig deeper because it's your business and your financial future on the line.
Right.
So be a discerning borrower or seeker of investment.
I love that phrase, discerning borrower or seeker of investment.
Yeah.
It really puts us in the driver's seat, making informed decisions rather than just chasing any opportunity that comes our way.
Exactly. Okay, now that we've emphasized the importance of due diligence, let's move on to a category of funding that I think is often overlooked: business lines of credit.
Yes, lines of credit. They're like a financial safety net for your business.
Precisely. They provide access to funds when you need them up to a certain limit, and you only pay interest on the amount you actually use.
So it's different from a traditional loan where you get like a lump sum upfront and start accruing interest immediately.
Exactly. You have more control and flexibility with a line of credit.
Yeah.
It's there when you need it, but you're not paying for it if you don't.
That's incredibly helpful for businesses with, seasonal fluctuations in revenue or unpredictable expenses.
Absolutely. It can be a lifesaver in those situations.
Right.
Now, securing a business line of credit usually involves going through a bank or a credit union.
So it's similar to applying for a traditional loan.
Exactly.
You'll need to provide financial statements, demonstrate your creditworthiness, and meet their lending criteria.
Right. But it's worth shopping around and comparing offers from different lenders to find the best fit for your needs. And don't be afraid to negotiate.
Good point. You can often secure more favorable terms or a higher credit limit if you have a strong track record and a solid business plan.
Absolutely. Now let's talk about a funding method that aligns perfectly with Z Consulting's expertise, and it's something that's rapidly gaining momentum in the business world.
You're talking about AI, aren't you? I knew you couldn't resist bringing it into the conversation. But seriously, how does AI play into business funding?
Well, AI is playing a significant role in transforming the funding landscape. AI-powered platforms are now streamlining the lending process, making it faster and more efficient.
So instead of dealing with mountains of paperwork and lengthy approvals, AI is stepping in to automate things.
Precisely. AI algorithms can analyze vast amounts of data to assess creditworthiness and even predict the likelihood of loan repayment with remarkable accuracy.
That sounds like a win-win for both borrowers and lenders.
Exactly. Borrowers get faster access to funds and lenders reduce their risk.
Hmm.
AI is also revolutionizing the world of investing. AI-powered platforms are analyzing market trends, identifying promising startups, and even automating investment decisions.
So AI is bringing data-driven insights to the investment process,
Precisely.
which opens up new opportunities for businesses seeking funding.
Absolutely. AI can help you identify potential investors, tailor your pitch to their interests, and even predict the likelihood of securing an investment.
It's like having a superpowered financial advisor at your fingertips,
Right.
really democratizing access to sophisticated tools and insights.
Exactly.
And this aligns perfectly with Z Consulting's mission of leveraging technology to empower businesses. And that's where Nidus Lab comes in. Their expertise in AI, web apps, and software makes them the ideal partner for businesses looking to harness the power of AI for funding and growth.
Right. If you're ready to explore AI-powered funding solutions, check out Nidus Lab at www.niduslab.com.
Okay, shifting gears a bit, let's talk about a more traditional funding method that can be incredibly effective when used strategically: factoring.
Factoring is a way to get cash quickly by selling your outstanding invoices to a third-party company known as a factor.
So instead of waiting for your customers to pay you, which can sometimes take weeks or even months, you get immediate cash up front.
Exactly. The factor then collects the payment directly from your customers.
Okay, so it's common in industries with longer payment cycles like manufacturing or transportation.
Right.
So it's a way to improve cash flow and keep your business running smoothly, even if customers are slow to pay. Of course, it comes at a cost.
You're right. The factor charges a fee, usually a percentage of the invoice value. So you're essentially paying for the convenience of getting paid faster.
Yeah.
But for some businesses, that trade-off is worth it.
Right. It can be the difference between staying afloat and struggling to make ends meet.
Exactly. However, factoring isn't suitable for every business. If your customers typically pay quickly or your profit margins are thin, it might not be the best option.
So it's important to weigh the pros and cons carefully.
Absolutely. Now let's talk about merchant cash advances.
Okay.
These are short-term funding options that are designed for businesses that process a lot of credit card transactions.
So retailers, restaurants, online stores, that sort of thing?
Precisely. With a merchant cash advance, you receive a lump sum upfront in exchange for a percentage of your future credit card sales.
Okay, so instead of fixed monthly payments like a traditional loan, you repay gradually as your customers make purchases.
Exactly. The repayment amount fluctuates based on your sales volume, which can be a benefit if your business has seasonal variations.
Right, if you have a slow month, your repayment is lower. Easing the burden a bit.
Right. However, merchant cash advances often come with higher fees than traditional loans, so it's crucial to compare terms and fees from different providers carefully.
And to ensure this type of funding aligns with your overall financial strategy.
Absolutely. Now let's move on to a funding option that's gaining a lot of traction in the digital age, particularly for businesses with a strong online presence: revenue-based financing.
Revenue-based financing. Tell me more.
It's a relatively new approach where investors provide capital in exchange for a percentage of your future revenue.
Okay, so instead of taking on debt or giving up equity, you share a portion of your sales with investors until they recoup their investment plus a return.
Exactly. It's a flexible model that aligns the investor's interests with the success of your business.
The more revenue you generate, the faster your investors get repaid.
And because repayment is tied to your revenue, it's less risky for businesses with fluctuating cash flow.
That's a huge advantage, especially for startups or businesses in growth mode that might not have predictable revenue streams yet.
Right. Revenue-based financing is becoming increasingly popular with tech companies, subscription-based businesses, and companies in the digital economy.
A win-win for both sides.
Exactly. So we've covered a lot of ground in this segment, from business lines of credit and factoring to merchant cash advances and revenue-based financing.
Absolutely. And we've emphasized the importance of due diligence every step.
Exactly.
We've also highlighted the role of AI in transforming the funding landscape, providing businesses with powerful new tools and insights.
Right.
And, of course, we encourage you to visit www.nidaslab.com to explore how Nidus Lab can help you leverage AI and other cutting-edge technologies to secure funding and thrive.
Absolutely.
We'll take a short break and be back with part 3 of this deep dive into business funding, where we'll tackle another crucial aspect of securing capital. Stay tuned. Welcome back to the Z Consulting Podcast. We're in the final stretch of our funding deep dive, and I have to say, even I'm feeling a lot more confident about navigating this whole landscape now.
That's the goal. It's about empowering you with the knowledge and the insights to make informed decisions for your business.
Speaking of informed decisions, there's one more piece of the funding puzzle that we haven't really discussed yet, and that's equity.
Yeah.
It's a concept I think that every entrepreneur needs to understand,
Yeah.
but it can be a bit tricky, especially for those who are just starting out. Can you break it down for us?
Sure. Equity is fundamentally about ownership.
Okay.
So when you give up equity, you're giving someone else a piece of your company in exchange for their investment.
Right, so it's different from debt, where
Yeah.
you're borrowing money and have to repay it with interest.
Right.
With equity, you're actually sharing ownership
Exactly.
and potential profits.
Exactly. So things like venture capital and angel investment, they typically fall under equity-based funding.
Okay.
These investors are betting on the future success of your business, and if it takes off, they share in the gains.
But there's a trade-off, right? Giving up equity also means giving up some control.
Absolutely. Your investors will likely want a say in how the business is run, and they'll have expectations about, growth and exit strategies.
So it's almost like choosing a business partner in a way.
That's a great analogy.
You need to find investors who align with your vision, your values, people you trust and can work well with.
Exactly. And remember, equity can also come into play with other funding options like crowdfunding.
All right.
Some platforms allow you to offer equity stakes in your company as rewards for backers.
Okay, so that can be a way to tap into a broader pool of investors.
Right.
But it's really important to understand the regulations around equity crowdfunding.
Absolutely. It can be a complex process, so seeking legal counsel and ensuring you're complying with all the applicable securities laws is crucial.
So to sum it up, equity is a powerful tool, but it should be used strategically
Yes.
and with careful consideration.
You don't want to give up more equity than you need to and choose your investors wisely. It's a balancing act between securing the capital you need to grow and maintaining control over your business.
And if you're unsure about navigating these complexities, Nidus Lab can help.
Absolutely. They can develop a sound equity strategy, connect you with potential investors, and ensure you're making decisions that align with your long-term goals.
They really have the expertise to guide you through that entire process, whether you're just starting out or looking to really scale your business. So check them out at www.nidaslab.com.
Exactly.
Okay, as we wrap up this entire funding deep dive, what are some final takeaways you'd like to leave our listeners with?
Well, firstly, remember that funding is a journey, not a destination.
Okay.
It's an ongoing process that requires adaptability, resilience, and a willingness to explore different avenues. There's no one-size-fits-all approach.
Absolutely.
Yeah.
What works for one business might not work for another. It all comes down to understanding your unique needs, your risk tolerance, and really your long-term vision.
Exactly. And always do your due diligence.
Yes.
Thoroughly research and evaluate any opportunity before you commit.
We've also seen how technology, particularly AI, is really transforming the funding landscape,
Absolutely.
creating new possibilities and empowering businesses of all sizes.
It's an exciting time to be an entrepreneur, and with the right resources and guidance, you can secure the funding you need to turn your vision into a reality.
That's a fantastic note to end on. We hope this deep dive has equipped you with the knowledge, the insights, and the inspiration to really embark on your funding journey with confidence. And remember, if you need expert help along the way, Nidus Lab is just a click away at www.nidaslab.com.
They can help you navigate the complexities of funding and achieve your entrepreneurial goals.
That's it for this episode of the Z Consulting Podcast. We release new episodes every Wednesday and Sunday at 7 p.m. Thank you for tuning in to the Z Consulting Podcast, where we discuss the ins and outs of business. Looking forward to having you join us again.